I made 50% in a week with the trading strategy that I'm about to show you. I'm going to show you 4 trades. In the first one that I'm going to show you, I made 50% in 2 days. In the next trade, I made 90% in 1 month. In the third trade, I made 40% in 2 weeks. And the fourth trade, I made 30% in a month. I like this trading strategy because it allows you to risk as little as $30 with a very huge upside of about $1,000. Of course, something this good means it doesn't happen very often. That means for this particular strategy, each stock is going to give us 4 chances every year. Now, if you're a beginner and you don't know anything about the stock market, I'm going to make it very simple for you in this video. And of course, if you're a seasoned professional or you're still learning about the stock market and how to swing trade, this video is going to show you a very good trading opportunity. I'm going to show you how I buy them, what is my criteria, how I sell them for profit. This is one of my favorite plays, and I learned it from a famous trader called Carla McGee. I did a lot of research into it, and it has been paying huge dividends for me. Before we go into the trades that I told you about, I want to let you know that there is a video on this channel that explains this strategy in detail. It's a 1-hour video, and it's a good investment of your time, because in this video I'm just showing examples which are results from that particular trading strategy, and I'm not getting into all of the details. So there's a free video. Go watch it so that you can become a professional in this strategy. Also sign up for my newsletter, where I will be sharing free stock tips and free trades that might be showing up like this in the future. And of course, if you find the information that I'm going to show you valuable, please like this video and subscribe to the channel so that it can reach out to more people. Thank you. Hims and hers. I like this particular stock because it gave us 2 opportunities this year. The first opportunity is here on 27th February. It did about, should I say, 40% in about 20 days. And then the second opportunity was here, where I bought it, and it gave us 90% in 1 month. This trade is something I call the earnings gap up play. It happens when a stock reports its earnings. So that means that investors must be very optimistic about the company and that it is reporting great earnings. So the first thing that we have to do is to check, is the stock having great earnings? Here we have a table that shows the stock earnings. And you can see the earnings per share. This company has been going crazy. Over the last 4 quarters, it has been growing by 200%, 100%, 60%. This is something that really accelerates the stock. Its earnings are accelerating. So in September 21, it did 60% year-over-year growth. Then it did 100% over the next quarter. And then it did 200% over the next quarter. This is a very huge growth. If you see anything above 50, that means that the company is doing very well. If you see things like hundreds like this, you just get into that thing. So after you've seen that the stock has great earnings, the second thing is to check if a stock is in a good industry. So we can see that when these earnings were released, this is the industry chart up here, and this is the stock chart down here. So what you want to see is that the industry in which the stock is moving up, because the stock industry actually affects 50% of the stock movement. So if the industry is going down, it's very unlikely that the stock is going to go up. So if we look here, the industry is going up. The stock is going up. The industry is going up. This is the day when earnings were released. If we look here as well, when the industry was trending up, that means that the stock also was more likely to trend upwards. Then on the day of the earnings, we can see that there is a gap up in price. And so many investors are scared to buy this gap up because it looks very huge. Here we can see that the stock opened up 18% above the previous close. Of course, many people are very likely to get scared and will not buy the stock, but this is a great opportunity for swing traders. So the way to buy this thing is to get the average true range of the day before the earnings and multiply it times 1.5. So on the day before the earnings, what is the average true range of the last 14 days? Here I have a number here that tells me 0.41. You see this blue number up here? That's the average true range. Then this yellow number is 1.5 of that average true range of the last 14 days. So I knew it was 0.62. And then what happens in the morning is that once it gaps up, I want you to wait for 5 minutes, right? So 5 minutes, because the first 5 minutes are a bit volatile. And after 5 minutes, you want to buy above the 5-minute candle, or you can wait for a minute and then buy above the minute candle. So what I normally do is wait for 5 minutes. So I'll put the daily chart here. I'll put the 5-minute chart here. If we look at that particular day, we can see that it went up for the first 5 minutes, and then the next 5 minutes it crashed. So actually our buy point was going to be 12.45. We were not going to experience this huge move down. So the trick is to wait for the first 5 minutes and then buy as soon as it crosses above the high, or wait for a minute and then buy above the 1 minute highs. And then you can put your low around 4%, or what we discussed before. So I'll put the daily chart here, and this is the 4-day chart. After saying that the stock has good earnings and it is in a good industry, also you want to make sure that it has had a large consolidation, that it was resting for several months before it moved. So here we can see that this stock actually was resting for 2 months before it did these strong moves. So the longer the sitting, that means that investors have been caught off guard. And then here we can see that it corrected for about 2 months. The stock wasn't really doing anything. And then when earnings were released, then the stock gapped up, it failed, and then it went up, about 90% or 100% in 1 month. So this particular gap up here was a little tricky. We can see that when the stock gapped up, it failed to move above the 5-minute candle for that day. So what I normally do is that once this gap up fails, because we can see that the stock reported earnings, it gapped up and then it failed to move, you just put an alert here. And any day it comes and crosses above the high of that earnings day, because sometimes the stock will crash on the earnings day, it can then recover later. So as you can see, I actually bought it on this day of 14th May. So what I did is I got that 1.5 average true range, and it was about 1.2 right there, 9% risk. Actually, for this particular one, I'll just keep around the 5% risk because there's a gap, and I know that it should not come down and fill that gap. And it went up about 80% from there. So this is the 90% that I was telling you about. And with about a 5% gap, I would say you're getting 15 times your return back. So if you risk $10, you're getting 15 times $10. And then how do you sell this stock? After it moves up, how you want to sell it is that once it closes under the 10-day moving average, so here is a chart, the yellow line is the 10-day moving average. Once it closes here and it moves below the low of the day, then you can sell it. So I sold it here around 22. I bought it here around 13.7. So this was a very good profit. Also this one, bought around 12. I don't remember what price I bought, maybe around 12.5. The selling is about here, around 15. Sometimes it's very hard to catch the whole move. Another way that I normally sell is that I know that after it consolidates like this for a while, then it's likely to move up 5 times my particular risk, right? So if the risk here is about 0.6, if I get the previous $0.6, I just know it's likely to do about 5 times that. So this is also like a selling criteria. This one on this side did way much more than that. If we keep 1.23 as a risk, 5 was here, you'd have sold too early. It did about 9.7 max. So it's very hard to know where it's really going to go. You will always either sell too early or too late in these things. Next stock is VIRC. So VIRC, this is a stock where it was possible to make 50% in 2 days. Now, of course, we have to go through our criteria again. The first criteria is that the stock must have been sitting for a long time. So here we can see that the stock was sitting for several months. So if we draw a line, you can see that from January to June, for 6 months, the stock was not doing anything. Sometimes the stock doesn't have good earnings. So if it doesn't have good earnings, then you have to look at that particular earnings report, and it has to be good. So this particular earnings report, we can see that it surprised the analysts by 200%. The revenue was surprised the analysts on the positive side by 24%. But the bigger thing is any surprise above 50% is great. And then we can see for that particular quarter, the revenue grew 34% year over year. And then the earnings grew 250%. So what happened on that day of earnings? Like I told you, come in here above the 5-minute highs or the 1-minute highs. Set your stop very close. For this one, I would have set my stop around 3%. And then we can see that in a week, it did a 50% move. like I showed you. If you want to know which is a good point to sell, is that I normally get the average true range of the previous day, which was 0.9, and then I get the opening of the day, so I put here 0.9. I found that it will move about 5 to 7 times from the opening of the day. So the first profit target would be around here, which is a 40% move, which you could have gotten in 2 days. And the second profit target was 7. Oof, it actually didn't quite reach the 7. Did it reach it? Just at the end. So those are the profit targets. Another way to sell is to wait for the stock to close under the 10-day moving average. There's no perfect way to sell these things. If you have a 10-day moving average, you can see you'd have sold here a 30% gain. Of course, you don't have to keep this 8% risk. Like I told you, you can keep a very tight risk of about 2%. So you're risking 2% to make 30%. I think that is a very good risk to reward ratio. And of course, one thing that I forgot to show you is that after it has been dormant, earnings are good, it has gapped up, make sure that it's in a good industry. We come to that particular day. Was the industry moving up? Actually, the industry was moving down. So this was a bit of a risky play, but it was still a good opportunity. It did not tick all of the boxes. Normally, you want the industry to be moving up. This industry was moving down, and this stock was going against the industry. I love this one. Now, Nvidia was a perfect play. From the day it gapped up on earnings, we can see that it went up around 40%, and everybody was like, oh, this thing is overpriced. But at the same time, I'm like, I have seen this move so many times. The first criteria is check if the earnings are great. Come on, look at the earnings per share. You want to look at year-over-year growth. Look at this year-over-year growth, 600%, 700%, 1200%. The only thing which I don't like about this growth is that it is now decelerating. So it was growing times 10, 1,200%, then 700%, then 600%. That means that Nvidia's growth is decelerating. Despite the fact that it's selling more, it is not accelerating. You want accelerating sales. So here, where it went from 28, 80, 850, then 1,100. The revenue is still great. The return on equity is amazing. After you see the earnings, you want to see that it's been sitting down for a long time. Here we can see that it made a base of 47 days. So it sat down for about 1.5 months. This is a good sitting down period. So on the day of the earnings, after it gapped up, what you want to do is buy above the 1-minute candle or the 5-minute candle, right? So you buy here. That would be your buy around here, $1 or $2. You can set a very tight stop of about 3%, 2%. And then the way to sell it is that as soon as it closes under the 10-day moving average, that is a good time to sell. It did close here around 126. So you could have made a 23% return with a 2% risk. Or if you saw this big red candle, you could have sold there around 30%. So you had all of that possible profit. How do you know where it is likely to move up to? To predict the price, what you normally do is get the previous day, right? Get the average true range of that day. So here I have this blue number is the average true range of a day. Then this yellow number is 1.5 times that average true range. So I found that if you get the average true range of the previous day before the earnings, that was $4.73. Put 4.73 here. I found that the good profit targets are 5 times. So this is the first profit target, and 7 times is a good second profit target. Yeah. We can see that these were the profit targets, and Nvidia reached both of them. So if you sold here, you'd have made a 33% return, with about maybe like this one, you could even risk 2%. So a 2% risk to make 33. So you're going to make 17 times your money back. So if you risk $20, you would get 20 times 17. If you put in $10,000 here, you're going to risk about $200 or $190. And then you're going to make $3,000. Now, is that a very good return? I like those odds. Also, one of the criteria is that on the earnings gap up day, you want to make sure that the stock is in a bullish industry. So we type in Nvidia, go to TC2000. On the earnings day here, was the industry bullish? Yes, it was. And that is a good criteria. And that was a very good and easy, quick return. The next stock was CRS. Oof, I liked this one. Very easy. So we can see we have our criteria. Has it sat down for a while? Yes, it was sitting down for a while. it must have at least sat down for 1 month. If it's less than 1 month, don't trust it. You want to see that it has good earnings. Now, this particular earnings report was not the greatest, but we can see that the stock has been having good earnings in the past. So this one earnings report, investors didn't care about it. The history of this company saved it. So it gapped up on earnings. It gapped up about 5.6%, right? So when it gaps up on earnings, you just buy it there, set the stop below like the 5-minute lows, the first candle. So here we could have risked about 2%, right? Another criteria is you want to see that the stock is in a bullish industry. So when it gapped up, the industry was going up. So it has sat down for a while. It has good earnings. The industry was also going up. All of those are good criteria that you need. And then on the day, you come and buy it here above the 5-minute highs or the 1-minute highs. Set the stop very close here. You could even have risked about 1.5%. So if you put in $10,000, you're risking about $150. And then you could have gotten $2,200, yet you risked $150. I think that's a very good trade. So if you want to know where to sell exactly, there are 3 ways of selling. So the first one is, like I showed you, close under the 10-day moving average. So it came here. When it did close, it was on this day, around $109. That was the first selling option. The second one is get the average true range of the day before, multiply it times 1.5. What was it? 4.14. Put it here. So what you want to do is that the first target level is the 5. So you can see around 5 times. If you see 5, so 5 risks up, that is a good first target level. And we can see when it reached here, it started to react. It went up and then it came down on strong volume. So you knew that, hey, the stock is struggling around this level. It's time to sell. And then another rule that I saw here is the low of 100. Once the stock reaches around $100, it should pass through that number very easily. So what happens is that once the stock reached 100, it went up for a while and then it came back and crashed. 100 is a psychological number. The stock did not survive to go through that number. So we could have sold here for a good profit. So 20%. And in how many days could you have gotten it? Let's see how long it took. 21 days. So that is about 2 weeks, 3 weeks for this easy return. I like those odds. The next one was BLBD. Like I showed you again, look at the earnings. The earnings great. Yes, the earnings are looking amazing. Return on equity is great. Second, has it been sitting for about a month? Yes, the stock was sitting for about a month. So here we can see several bases. So while it looked like it went up, really the stock was not going anywhere. So I would say the first sitting day, I would consider it here, 16th February, and then it sat for quite a while. On earnings, it gapped up. So the day when it gaps up in the morning, we want to see, is it in a bullish industry? Come here in TC2000 here. The industry was not bullish, but I still bought the stock. Why did I buy it? Because it was showing very strong price action. Sometimes I break my rules, but you want to see a very bullish industry. And then you want to buy above the 1 minute or the 5-minute highs. So if you put in the 5-minute candle here, and we put in this day, the gap up, you can see that if you bought above the highs, you are safe. How do you buy it when it gaps up? Like I showed, you can come and risk here, $2.2. That's the risk. It did not quite go lower than that number. Then we know that it can 5 times the first target, which is about $55. And the second target is 7, which it did not quite reach. That was $60. So when it reaches 5R, which is your first target, and you see it struggling to move up, that means it's not likely to go through. But if it just shoots straight through that, then you can go to your next target of 7. If it also shoots through the next target of 7, then you can just use a 10-day moving average to direct you to sell. So once it goes up here, I sold on this day for this particular one. I sold here about $54. So the maximum profit you could have gotten was 33%, but I just got about 24%, which is close to the 5R. It's very hard to sell perfectly, but this is how the business works. So I hope you've enjoyed this video. If you found some value to the channel, for more lessons, there's a free newsletter where I'll be sharing all of this information as well. And like the video so that the algorithm can spread it out to other people.